In this video, we're going to go over the only A plus setup of the last week. So that's from the 22nd to the 26th of January, right? So the week just gone. If you're watching this video, this is being recorded on the 27th. We're going to go over the only A plus setup of this week, and we're going to be going over some ICT concepts to back that up, right? So as you can see over here, right, the narrative going into the week was the fact that we are bullish on the H4, on the 4-hour time frame. We're bullish from this swing low up to this swing high. Now from here, what we've seen a complex pullback creating equal highs, but more so the narrative is for price to head lower to this region over here. Now this here is a H4 POI. This is the H4 discounted POI or order block or fair value gap, whatever you want to call it, right? We have a fair value gap here. And so because of that, we are anticipating lower prices down into this region over here, right? So with that being said, we're going to dissect a high probability trade setup that you could have taken on euro dollar, taken advantage of that, capitalize on that. So if we go down now to the 15-minute time frame, we can dissect the price action in a lot of detail. Okay, so the narrative is for price to head down lower and hit this 4-hour POI beneath us, visible on your screen. Now from here we have to understand the week prior, right? The week prior, so Monday, the 15th, 16th, 17th, we just saw a continuous downtrend. We saw bearish order flow, right? We saw bullish order blocks being violated and bearish order blocks being respected. So we know that we're in overall a bearish market over here, a bearish order flow market, right? And so because of that, we're primarily looking for sells. And here's how you could have got involved looking for sells, right? So what we see is we see a bearish start to the week on Monday, the week before, so Monday the 15th. We've seen price head lower and we've seen price inject bearishness into the market. Those sellers have come into the market, right? Giving us a reason to look for sells because the higher time frame narrative has a fair value gap beneath us. So if we now come into Tuesday's price action, which is where the setup occurred, right? What we need to be is we need to be very intricate when we look at our price, and we want to look at things in terms of data points. So what we have over here is we have an Asian range, right? The Asian range is very typically the consolidation or the accumulation phase, right? So here we have the Asian range. Now the purpose of the Asian range is to accumulate liquidity, and it's a low volume time of day, right? So we have buy stops and sell stops. Now, over here at 5 a.m. in the morning, what we have here at 5 a.m. in the morning is we have something called the IPTA reset time. So that is 5 in the morning if you're in the UK, but it is going to be midnight Eastern Standard Time, right? So this is midnight Eastern Standard Time. Now from here, what do we see? We see two things or three things we need to keep in mind of, right? The first thing we see is we see price manipulate higher. And so this arrow here represents the midnight opening price. Let me just make that a little bit thicker so people can see. So here we have the midnight opening price. Now the midnight opening price is very important because this is known as the IPTA reset, right? Here is the IPTA reset. Now from here, what we see is we see the London session manipulate above, giving us a manipulation in price. Now this manipulation in price is the catalyst for lower pricing, because what we see is we see buy stops get triggered before manipulating lower. Now the next thing we need to look at in a lot of detail is where a fair value gap occurs, because we as ICT traders are entering off a fair value gap. So what we see over here is we see an accumulation in terms of the Asian range. We see a manipulation higher above the New York midnight price, and then we see a large displacement down. Now this displacement is known as a simple market breaker structure, right? A simple market breaker structure. So a structural break or an MSS is all refers to the same thing, right? Simple break of structure now. So with that being said, now that we've got a clear break of structure in this region, right? Market shift of structure, break of structure. Now we know that we have a fair value gap over here to enter off, right? This is our fair value gap. And we enter off a fair value gap, okay? So if I just draw a rectangle over here to mark out the fair value gap, so the last up candle prior to the down move, what we see here is we see a fair value gap. Now this fair value gap is critical for entry. Okay, cool. Now the question now is, when do we see price mitigate this fair value gap? Now this fair value gets mitigated this week, and this is what makes it a high probability trade for this week, right? Bearing in mind we have an unmitigated fair value gap, okay? So if we just continue to draw price along, we can begin to see in real time what actually happened with this trade. Cool. So as you can see, price mitigated and fell off pretty aggressively, targeting the low of that week, okay? So if we just have our entry here at the start of the stop loss, at the start of the order block stop loss just above, and we target the previous week's low for a 1 to 5 hour trade, 4.95 hour trade. Excellent trade here, right? Now from here we want to ask ourselves, what makes this trade such a high probability, and why was this the only high probability trade of the week? And now the first thing we understand is that we had an AMD, or a power of 3, in this region over here. So this entire piece of price action over here was essentially the power of 3. Power of 3, or the AMD. We've seen price manipulate, accumulate, and distribute all at the same time. Now our job as traders is to understand liquidity, right? So we saw quite a rangy week this week. And now from here we have to understand a few things. The first thing we want to understand is that we have an unmitigated fair value gap in this region, and so price is likely to reach this at some point. But now you have to ask yourself, when price moves up, there's two reasons why price is going to move up. There's only two reasons why price moves up. The first reason is, and they're both connected with each other, the first reason is to sweep buy-side liquidity, right? Buy-side liquidity, BSL, buy-side liquidity. And the second reason is to fill any fair value gaps above us. Fill any fair value gaps above us. So we have over here liquidity in the form of, well, first we saw the market engineer trend line in this region over here. So first we saw a trend line in price. Easy retail pattern to spot. And we've also seen previous day highs as well, right? So just beneath this order block, or this fair value gap, what we've had is we've had a previous day high, Monday's high in this region. This trade was on the Tuesday, so we saw a PDH, or a previous day high, right? And this is what makes this an extremely high probability order block. It's the fact that we have liquidity as well as an unmitigated fair value gap. And this is essentially the basics of a market maker model, right? This is a market maker sell model. What we do is, on the day itself, we have a power of 3 model. And from here, we have a fair value gap to target. And we have liquidity, right? So we have liquidity. So we have buy side liquidity as well as a fair value gap to fill. And with those two things in mind, a fantastic 1 to 5 trade can be placed, targeting the previous low of the week, right? Yes, it does make sense to target the H4 low, but again, you're targeting now a 7.5 hour trade, which is extremely higher RR. A safe stop loss, a safe TP is simply going to be the weekly low for 1 to 5, and that's plenty, right? And this is essentially your high probability setup of the week. So if we just go and recap that again, on the higher time frame, we're of course bearish, targeting this H4 POI over here, this H4 POI, H4 fair value gap. Now from here we have the accumulation, manipulation, and distribution, right? And this is what we're looking for. And this is our bread and butter and how we trade here at Liquid FX. Everything is ICT based, using the accumulation, manipulation, and distribution, right? Accumulation in the form of the Asian range, the manipulation in terms of the New York opening midnight price, and all of this forms a power of 3 setup. It's always the power of 3 every single day on those lower time frames. 1 minute, 2 minute, 3 minute, 5 minute, 50 minute. It's always a power of 3. Now, with that being said, we see a very clear fair value gap being left, and this is a London ICT fair value gap. Okay, so we see a fair value gap being left here, and we understand a fair value gap is where price has been delivered in an inefficient manner, right? So for price to be fair in this market, we must see a rebalance of that fair value gap at some point. And this is what this trade is based on, right? So the first reason why price would head up higher in the first place is to fill this fair value gap. Now, the second thing price is going to do is price is going to engineer liquidity. And when price engineers liquidity, by definition, there's buy stops above it. So we have buy side liquidity to target. And we see that in the form of previous day highs and just generally trend line liquidity as well, an Asian high liquidity, right? Previous day high over here, previous day high over here. So all this buy side liquidity gets swept before we see price mitigate the fair value gap and head lower. So this was the one and only A plus setup on euro dollar this week. Let us know what you think in the comments, whether you caught this trade, and let's see what we can do to get you better and better in trading. So if you're interested, give this video a like, a thumbs up, and I look forward to seeing you all in the next one.